Hello, welcome to the European Open briefing for Friday, September the 29th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So the US dollar is off yesterday's highs on a bit of profit taking, as well as some doubts growing about the likelihood of those tax plans being approved by Congress. We're going to have a batch of US data consisting of personal income, personal consumption, and the Fed's preferred measure of inflation coming out later in the US. So that's going to be the day's main focus. The Japanese yen is broadly weaker this morning after the Bank of Japan's summary of opinions of the September policy meeting showed that the bank is tilting on the dovish side, and the pound, although it has come off yesterday's highs, it nevertheless did receive a bit of a boost yesterday on signs of the Brexit talks making a bit more substantial progress. But let's first start with the US dollar. We can see here both dollar yen and dollar index are off those highs yesterday. We saw the dollar yen reaching a 2.5 months high of 113.25 a couple of days ago. The dollar index yesterday reached a 6-week high of 93.60. So we had Janet Yellen, the Fed chair, maintaining that the Fed will likely continue raising rates gradually. She was overall a bit on the hawkish side, so that upped the odds of a December rate hike. We also had yesterday President Trump, rather a couple of days ago, President Trump unveiling his much-awaited tax overhaul. We saw big tax cuts for corporations and middle-income earners, so that boosted expectations of further rate hikes down the line. But we are now seeing that initial excitement fading away as the tax plans are going to have a long path until they get approved, likely to face several hurdles. It has a number of opponents. Mainly Democrats are arguing that the tax plans favor the rich, while some Republicans are worried that the tax plans will lead to a much bigger deficit because the Trump team hasn't really explained how those big tax cuts will be financed. And also worth mentioning that yesterday we had the final estimate of the second quarter of GDP for the US, which was revised up from 3% to 3.1% at an annualized rate. But today's data will be more important. We're going to have the August personal income consumption data as well as the PCE price index, which is the more closely watched inflation indicator used by the Fed. Moving on to Japan now, because we did have quite a flurry of data releases out of Japan this morning. We saw household spending month on month coming in above expectations at 0.2%, but fell below expectations year on year, just 0.6%, although overall household spending or consumption does seem to be holding in Japan. More importantly, the core inflation, which is targeted by the Bank of Japan, rose from 0.5 to 0.7% as expected year on year in August. That's a 2-year high, and we're seeing Japanese consumer price growth moving further away from zero and closer to the Bank of Japan's 2% target. We saw unemployment holding steady at 2.8%, and the industrial production also came in above expectations, although retail sales was below expectations, coming in at 1.7% versus a forecast of 2.6%. More interestingly, though, we had the Bank of Japan's summary of opinions of the September policy meeting, where we are still seeing no signs at all that the Bank of Japan is thinking about scaling back its monetary stimulus. In fact, some members voiced concerns that on the one hand we've got the increased geopolitical tensions in the area, which could potentially impact on growth, especially if they were to escalate further, and also there are concerns that the sales tax that's planned for October 2019, that could also dampen growth. So we're seeing the Bank of Japan sounding a bit more dovish overall than in its previous meetings. So that did weigh on the yen earlier today, which was broadly lower, though now going into the European session, the yen is looking a little bit firmer. Moving on to the UK pound now, we can see in the chart here that the sterling has been it's generally been drifting lower since those 15-month highs last week. Yesterday we saw that boost here, which helped sterling climb off 2-week lows against the dollar to back above the 1.34 level. Yesterday we saw the EU chief negotiator Michel Barnier saying that following Theresa May's speech in Florence last week, there is a new dynamic in the negotiations, and that they had a constructive week. Of course, this week, yesterday rather, they concluded the 4th round of talks. The UK Brexit Secretary David Davis said that they made considerable progress. We also had the Bank of England Governor Mark Carney yesterday talking at the Bank of England organised conference, saying that monetary policy alone cannot offset all the negative impact of Brexit. Carney was speaking earlier again today in a radio interview, and he gave his strongest signal yet that the bank will be raising rates. In November, he said that all the indications are that the UK economy is on the kind of track for rates to increase in relatively near future. So that did help sterling come off this morning's lows. It had fallen below 1.34. It managed to climb just above that level after those remarks by Carney. Moving on to the euro is looking a little bit more bullish this morning following recent losses. It had fallen back below the 1.18 level against the US dollar. It is appearing to be attempting to reclaim that level this morning. It's also up against sterling, attempting to recoup the 0.88 handle, but overall there is perhaps that seem to be some shift in expectations of how soon or how quickly the ECB will scale back its massive asset purchase program. We are seeing ECB policymakers continue doing the rounds in terms of public appearances, and they pretty much seem to be talking the same language, that in October we're likely to get a policy adjustment rather than a tapering announcement, and all of them seem to be supporting the idea that the Eurozone economy needs it still requires accommodative monetary policy. So this has led to a shifting back of expectations of full-scale tapering way back into 2018. We also had the Greek Central Bank head Yanis Stournaras saying that the stronger euro could hurt the Greek economy. So that highlights the fact that the periphery Eurozone economies are more concerned about the stronger euro than the northern Eurozone economies such as Germany. Today's economic calendar is going to be quite a busy one. We're going to have UK GDP coming up very shortly, as well as the flash Eurozone inflation numbers for September. And in the US session, the focus will be on those personal income and consumption data. We're also going to have monthly GDP numbers out of Canada and University of Michigan Consumer Sentiment Index out of the US as well as a number of central bank speakers. Bank of England Deputy Governor will be speaking at 12 hours GMT. Governor Mark Carney, again, he'll be speaking at 14 hours GMT. And Philadelphia Fed President Patrick Harker will be speaking at 15 hours GMT. That's it from me. Thank you very much for watching, and have a great day.